Fasten your seatbelt, folks. They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Hi, my name is Shane Moran, and I'll be your host for this week's episode of Live from the Vault, the show that goes beyond the headlines and uncovers the truth about the precious metals industry and about the effects of the global economy in these historic times. With exclusive access to experts and insiders, we reveal information and insights that you simply can't get anywhere else. Now, this week we have the one and only Andrew Maguire, precious metals expert and whistleblower, in the house. And to help him pull back the curtain, we'll be joined by industry expert and producer of Grid Down, Power Up, Mr. David Tice. And David is the co-manager of the Precious Metals Equity Investment Management Fund, and he's also producing an important documentary on the vulnerability of the power grid. It's called Grid Down, Power Up. And with that, let's head over to the UK and talking gold with the one and only Andrew Maguire and our special guest, David Tice. Over to you, Andy.
Well, this is a real pleasure for me. Thank you, Shane, for the introduction. Look, who do we have here but David Tice, the David Tice, and he's another one of my favorites from Texas, where they make some really cool people in Texas, I'll tell you. So nice to see you, David. Thanks for joining us, my friend.
Always a pleasure, Andrew, to be with you and your very intelligent listeners.
Well, that's great. And obviously, Shane will have done an introduction, but also before we get into some of the current stuff you're doing, which is mind-blowingly interesting, to be honest, people should remember you. Maybe some of the younger viewers won't remember you, but I'll tell you what, you became very, very, very big on all the mainstream networks. And I never forget you when you were running the Prudent Bear Fund, that you were the one guy out there, I think the only one out there, while all the money honeys were singing how gold, stocks, tech stocks were going to rise, IPOs were coming up, jump on board. And there you were, and you were there shaking your head saying, no, look, hang on a minute. So can you tell us a little bit about that time? And because you were a real advocate for gold.
Well, so I started my Prudent Bear Mutual Fund back in 1996. And so people forget, but Alan Greenspan made his famous irrational exuberance speech back in 1996. And so this was the first mutual fund of its type that was 100% short all the time. And so we were saying that we would provide a reliable hedge for investors. And we felt like the market was at risk in 96, 97, 98, 99. We definitely had some declines with the Asian crisis back then and long-term capital management, et cetera. But the big decline happened in 2000, 2001, 2002. We actually produced a symposium at the New York City Waldorf Hotel where we had 9 PhDs speaking, including Larry Lindsay, Mark Faber, a number of great luminaries, and we warned about the danger from excess credit. And it was covered by the front page of the Wall Street Journal the next day. So inside our fund, we actually held gold and silver mining companies because that provided a hedge against the excess money printing that the Federal Reserve, engaged in, especially from 2003 to 2008.
Yeah, and I mean, what a time to be advocating gold stocks, etc. I mean, because you just talked about a period that walked right the way through to the Brown's bottom, Gordon Brown, selling all of the UK gold, 400 tons of gold. And what we had there was a gold price of, goodness me, it was at like $250 or something. And you went right through this period. So a lot of the people I know positioned themselves accordingly. And obviously owe you a great debt of gratitude there, David, because that look at the price of gold now, and look at how that has influenced these hedges that you were talking about. So really interesting time.
Yes, it certainly was. And now we have gold, breaking through 2,000. I guess this is maybe the fourth time. And hopefully we're through it to stay here, because here we've gone from $8 trillion in debt back in 2007 to 31 trillion today. I mean, it's an amazing time. And all our adversaries and competitors globally are worried about dollar hegemony and what that's done to the global system and what this has done to emerging markets, et cetera. And the BRIC nations are certainly meeting, and they're worried about, they would rather this not be a unipolar world in terms of global reserve currency. And I think gold is going to play a bigger role in the future going forward.
Yeah, and I think you're talking about, we're talking about de-dollarization here. We're talking about the decline of US dollar hegemony, and I think it's interesting because Bloomberg, I think it was this week or even, they came out and reported the dollar share of reserve currencies is reached like unprecedented low levels. They were talking about in 2001 it was 73%, 2002 it was 47%. And just based on what we just said, I mean, you've got the BRICS Plus nations, you've also got 19 new members seeking to join this alliance. And that after the weaponization of the dollar and the red lines being crossed in Russia, the possible red lines being crossed in China, China already sanctioning proof themselves in case of war by taking the barriers down between historic enemies, creating a land bridge, which actually creates a sanction-proof conduit for them that can't be interfered with. So this is quite amazing. Where do you see the dollar going from here, David?
So I see eventually the dollar going lower. Now, essentially, lots of people use the metaphor as far as the dollar being the least dirty shirt in the clothes hamper when you're looking for a shirt to wear. And I think the dollar is going to decline relative to gold more than anything. In terms of, I don't think China has what it takes to be, the global reserve currency. Certainly the ruble does not. We can't see that with Brazil and the euro, et cetera. So there is, I think, the overall global monetary plumbing is broken in terms of what we have with all the euro dollars that are out there, and the dollar goes up at times just because there's such demand for collateral and interest payments for all these euro dollars. And there's people a lot smarter than me that can articulate that better. But so I'm not sure if the dollar's index is going to crash here, but gold is going to do very, very well versus the dollar.
Yeah, and I think one of the things we've been drawing our attention to for actually since March 2020, when really it was that huge difference where we saw the over-the-counter markets, which was the 10 times larger over-the-counter markets, where we saw the liquidity providers so used to taking a paper gold position and leveraging it multiple times in the futures market. And suddenly we had the refinery shutdowns. And although this is different to what we're seeing now, because we also have a physical shortage, but it's for a different reason, all of a sudden with the refineries shuttered, people turned around on the liquidity provider and said, hang on, T+2, thank you, I'll take it. And they had no physical to deliver. And we saw $80 to $100 spreads initially per ounce for these guys to even buy back into a bid-only market in the futures market to try and buy back these positions because they had no physical. So So now what we're talking about with the dollar is that whereas you could treat gold and silver as because it is a foreign exchange currency. It's people, I mean, you know it, I know it, so many people, and our subscribers know it, but so many people don't understand that it's actually a foreign exchange cross. So when you're long the dollar, you're short gold, or you're long gold, short the dollar, or pound, euro, and so it goes on. Because it's money. It's always been money. So they have to treat it as money. So talking about the dollar, so when you then, as far as gold's concerned, when you short gold and buy the dollar, you better be prepared to, the resulting fixed price is a price that you can, since Basel III was introduced in 2003, you can turn around and demand physical delivery. It's not a question of, do you have it? You have to have it. The regulators say it's a first-tier asset. You play with this product. You have to have it. So I see from the dollar perspective in gold and silver an interesting dynamic, because you start literally just piling in silver, buying the dollar against gold, or buying the dollar against silver for that matter. What you're going to end up with is a delivery obligation which you may not be able to fulfill. So interesting times for gold. What do you think?
Oh, certainly. And Andrew, to brag on you, and I know your viewers all know this, you are the go-to guy understanding this physical versus paper phenomena with gold, that I've believed in, for a long time. And you and I have a joint friend, Bill Murphy and Chris Powell at GATA, who have a great organization educating people. But you're the man in terms of understanding all of this complicated plumbing that goes on. And I think something is going to break there in terms of physical versus paper. And we know there's 100 times greater paper than physical, or is it 1,000-fold greater? And therefore we have a dysfunctional global system in terms of gold, and there's definitely been gold suppression, and this is going to blow up at some point.
Yeah, and so I was going to ask you, from your side of the pond, obviously we've got Yellen out, we've got Jamie Dimon out this week, all the spin masters are out, David's talking about their own book, but they've been wheeled out to kind of spin the ongoing mantra that the banking crisis is under control. Do you think so?
I tell you, I'm very nervous about it. I mean, we've had 4 big, bank failures or forced acquisitions recently with, massive banks. And we've had interest rates go up like we've never seen before in terms of the Federal Reserve tightening over the last 6 to 9 months, and therefore there's unintended consequences from some of that. And we see depositors, exiting stage left, and we have the government trying to say, we got this, we're going to cover all the bank deposits. However, once confidence starts to wane with a monetary system, fractional reserve banking system, we really don't know what we're going to have. And we saw with Silicon Valley Bank, one individual, Peter Thiel, was telling all his portfolio holdings and really all of the technology, industry to get the heck out. And therefore, it's a fragile time, I would say. And then you look at the fact that we already have $31 trillion worth of debt. And so if our government is going to stand behind every bank deposit, and here we have a lot of assets on these bank balance sheets that are worth 30% less in terms of long-term treasuries. And then we look at all their real estate holdings. Commercial real estate holdings looks like it's in a significant decline scenario, and obviously just the interest rate perspective on that, the yields are much lower there, and in a higher rate environment, just the mark to market on those real estate loans, even if there's good credit, they're worth a lot less.
That's a huge thing to mention, because that's something that we've been looking at, and I'm sure you understand this way better than I do, but that commercial real estate market, it just considering that that's kind of mixed in with also, because of the Fed, I guess I could step back, because the Fed forced rates up so fast, it kind of triggered the issue in the first place. Because they never stress tested any of these regional banks, never stress tested what would happen if we drove rates up to 5%, and these guys are paying like a tiny percentage out to their clients. So would that not see a race out of these deposits into the money market funds? This is, I guess really what I'm saying is the Fed seems to have triggered this issue because they hadn't thought it through. But this commercial real estate market, surely that sounds like a major issue. That sounds like a really huge shoe to drop.
We think commercial real estate is a huge shoe to drop, because you look at retail and office are both, potentially have, great vacancies, and those vacancies are escalating. And post-COVID, more and more people are working from home. They're not rushing back to office markets, and we still have way too much supply. And you look at what's going on with the internet, Amazon space, et cetera. They're wiping out small retail merchants, and therefore I haven't studied the retail commercial real estate market in depth, but just from a big picture standpoint, I can see certainly issues there.
Yeah, and especially as something like 70, possibly 80%, my understanding is that something like 70 or 80% of these loans are basically have been provided to everyday Americans, like the farmer, the bus driver, the people involved in everyday business have gone and borrowed money, and essentially if you start to remove liquidity from this huge section of aggregated of money that starts to flow out of the system, or it starts risking collapsing. This to me it's like, to me, Armageddon. This looks like do you think that it can be handled? If that shoe drops, I know you've just outlined it, but how bad could it get?
Well, I'm a big believer, as I think you are, in the Austrian School of Economics. And this is Ludwig von Mises, Murray Rothbard, Joseph Schumpeter. And one of the key concepts there is the magnitude of any decline is proportional to the excesses created during the prior boom. And if you look back over the last 25 years, what we've done is that we've always utilized the Federal Reserve to cut rates, and the Austrian school says that the economy should be cleansed from excesses. And frankly, we have not cleansed the economy. We have not let significant declines occur and a cleansing, and therefore because of that, we always kick the can down the road, and therefore the eventual ramifications of that will be far greater with a bigger decline.
And I suppose really then it brings us to the question, and we know the answer here, David, but basically, or one of the big answers here, is then if you're going to opt out of the system, which basically we're saying, guys, if you can opt out, you should opt out. You need something to opt back into. And clearly, 5,000 years of history tells us, you can just look at, if you want back testing, you just have to look at gold for 5,000 years. That is the ultimate back testing. Silver, too. So obviously we need to have something, we need an action point, because what we're talking about here is really education and helping people. We're not telling people to do anything. We're just literally bringing attention to certain situations that may actually trigger an action point in somebody else who's decided to hang on, maybe we should take responsibility for ourselves. And so really gold is one of them. Silver is another one. But there are many people, David, who think that cash is the safe haven bet. Really, what do you think about people, or what would you say to people who think that loaning money to the bank by depositing it in your name is a good idea?
So what's misunderstood certainly is the fact that the government, and I don't have these, congressional laws, numbers, committed to memory, but in terms of bail-ins, where there can be a bail-in for if the banks get in big trouble. And we saw that, I guess, in Malta and Cyprus in the past. And the question is, you own in a bank deposit, it's essentially a liability of the bank. And we saw, during the 2020 crisis with COVID, when the market declined, a great deal, people had to wait a couple of days to get their money out of banks. I mean, it happened to me. And so cash in the bank is not necessarily as safe as you might think. And then when the government is saying, we got this, well, that's as long as people have confidence in the U.S. government. And certainly we're not there yet, but there can be a tipping point. And gold, you mentioned before about 5,000 years of monetary history. You just need to look back at history of the Greeks and the Romans and the Confederacy, etc. Whenever there is a fiat money system, essentially where the currency is backed by nothing, our rulers tend to debase the currency gradually over time. And that's what this massive debasement of the currency has come in terms of the extension of credit and this massive increase in debt to $31 trillion. Our rulers will debase the currency in order to satisfy their constituents. And therefore, it's happened thousands and thousands of times. And we're seeing it again, so protection against that is holding gold, silver, and precious metals.
Yeah, I mean, you just described a huge confidence trick because, as you say, you use the word confidence. You have to have faith in what you're dealing with, and so I guess your choices are something that's bought and paid for, something that all the energy that has gone into it is there in your hand. It's the physical gold and silver. It owes nobody. It owes nothing to anybody else. It is what it is, and so therefore it can't. As money is printed. So we're talking about cash for a second. So a couple of issues: faith in the system, whether you could possibly get bailed in, but on the other hand, you're losing. Inflation is eroding your cash anyway. So it's not really a great decision. You need to put it somewhere where it's, well, first of all, where you can get it back. So obviously that would be in something, buying something physical. Obviously, gold and silver are the most fungible currencies on this earth, and fungible anywhere in the world. With anybody, any place, doesn't matter what they understand. If you speak a different language, they will understand your ounce of gold, your ounce of silver, and it'll be worth exactly what it's worth. So it's interesting because right now we talked about the Fed today, and we're recording this FOMC day, and the Fed's expected to raise rates by a quarter of a basis point. But isn't that just going to add fuel to the fire of these people invested in still invested in these regional banks, getting such a tiny percentage. Suddenly, you now go up to 5.25%. But then, why would you just not, regardless of whether you have faith in the system, faith in the bank, or trust the bank anymore, you're simply going to get, by moving that money into a money market fund, you're going to get a higher rate of return. But I think the other issue there is we know that money market funds can be gated, bailed in. So it's another issue that I think we should draw attention to.
Exactly. So gold is such a great place to go, and the fact that we're at 2020, a few minutes ago when I checked, and it's holding above 2000. And you and I are both believers in gold suppression. And in the past, when it's broken through 2000, I mean, it's been knocked down, I think artificially by paper, means. And the fact that we're still above 2000, and Porter Stansberry Research, that's one of the brightest newsletter organizations out there with, I think, hundreds of thousands of subscribers, and some of the smartest guys in the business have a $3,000 target for gold, I believe, by the end of 2023.
Yeah, and I think if you're if you're a hedge fund manager, if you are a legitimate, using the futures market in a legitimate way. I'm not talking about gaming the market. So obviously, if you own, if you need to hedge risk, then clearly one of the options available to you is gold. Now, okay, so now we're worried about paper gold, because paper gold is the reason you've just described how they can always nail the price back down, because you can usually rely on a speculator or a CTA or whatever, we call them a speculator in a sense, to never take delivery. So if you know where they've borrowed it and you know where their margin position is, then, and you can aggregate those pretty easily by looking at the technicals, you can nail them. You can force them out at a loss and you make a profit. But what is so interesting, I think this is what I keep really trying to hammer home to so many of the people we meet every day, is that something changed on the first trading day of 2023. Gold became a first-tier asset, as determined by the Bank of International Settlements under Basel III and SFR requirements to have physical backing up your position. So therefore, so you've got a combination of speculator now. To me, you've got the sticky speculators, which is we've just described, people legitimately hedging risk, and the more the risk, the more you're going to get in, and you're going to have a hedging position, which is sticky. It's not, they're not looking at where is my exit point. What you're looking at is the problem is still there, and I'm not going to get knocked out. I need this hedge, so I can play the game elsewhere, and take the risk. But then we've got the non-sticky speculators, which are the only ones left to rinse, and these are the guys sitting each side of the dollar gold dynamic, where it's a currency. You got a tick up high in the dollar, you see a tick lower in gold. But then that flywheel hits a brick wall, because suddenly, with Basel III compliance, this is deliverable. So now, as far as we are concerned, and we have contacts all over the world, and as you know, and so what we're seeing is this game being played back against the managers, let's call them, the market riggers, the suppressors, the cartel, whatever you want to call them, but the managers. And as we know, the Fed openly admits that they intervene in the foreign exchange markets, but no, of course not gold. But yes, even though it's a foreign exchange cross, and they do intervene in the currency crosses. But what they end up doing, because of Basel III compliance, is they end up creating a fixed price. And that fixed price is being now targeted by BRICS plus countries, by Russia, China, countries that are realizing this is cheap. This is since Nixon closed the gold window, this is the gold window reopened, because I can now take some of my dollars, which I'm trying to de-dollarize anyway, my depreciating dollars, I can convert them at this gamed paper fix. And it's like, so suddenly we've got this dynamic where I don't believe that they can play the historic smashdown that we always grew to expect.
Well, again, you are the global expert on this internal plumbing, and that's why your listeners listen to you. And so I think we, breaking through 2000 like we have, staying above 2000, forecasts of the increased pressure from the BRICS Plus in terms of moving away from the dollar is we see Saudi Arabia getting closer to China and Russia now in terms of pricing of oil. I think that can be a big thing. And just fasten your seatbelt, folks.
Yeah, I mean, this is really interesting stuff, because David, we're witnessing history in the making here, because this is a pivot point. There are many pivot points in this throughout history, but I feel privileged to be a part of watching this pivot point turn, and this is why it's so good to have yourself on, because you're also bringing you have so much experience from, and this is a learned experience. This is why elders are looked to, because you gain experience. You get something, an algorithm in your head that says, I know why, because it is experience. You can't buy experience. And so this is why people should listen, and especially to someone, a sage like yourself. So I think what you're saying essentially is don't trust the banks at this point. This is what I'm listening to. Pick up some physical products, whether it's gold, silver, or something you can trust, and really be very careful about trusting the system. This is what I'm hearing.
Yes, that's exactly right. And in fact, I'm in Austin, Texas today. I'm going to be walking around various legislative offices, but we have a bill that is going to essentially allow there to be a gold-backed currency from Texas. And so it's pretty interesting. We have a gold depository outside of Austin, and this bill will make it easier by which ordinary citizens can hold gold and essentially not be taxed on the fluctuations in the gold price, and have a debit card such that they will be able to, make purchases, through gold. And so it's pretty interesting, and we're hoping to get this passed.
And there's no taxes. You're saying that. So what we're saying is, so there'd be no capital gains tax on the price of gold rising.
I believe that's the way it's set to work. Exactly.
That's interesting, because that's how it works in the UK, only with one product, which is a sovereign. And the sovereigns have always been protected from capital gains tax. So we see a lot of clients, there's no VAT on gold in this country, no VAT on gold in most countries, but essentially the sovereign is still considered to be currency, and so therefore you cannot be taxed on that capital gain, which has always been the way. It's just historic. So it's interesting. I would think that this is such a good thing that we're witnessing here. And you're not the only, Texas is not the only state looking at this. Is that not right?
I'm not conversant with other states that are doing anything like this, but I think Texas is definitely ahead of the curve.
Well, David, talking about Texas, this is something which I'm going to really ask really everybody to follow through on this. you are not just an investor, you're also a filmmaker. And you've just produced a film that's won, how many awards has this film won?
So it's won 15 different awards now.
And can you tell us what this is? Obviously, and the beauty of it is that you can find this online, and it's not going to cost you anything to view this documentary, this hugely important documentary, which has got me thinking and asking questions in this country as well. But can you just go through and give us an outline of what this is all about?
Well, thank you for the opportunity to talk about this. So the film is called Grid Down, Power Up, and this is about the vulnerability of the U.S. power grid and that we are so reliant on electricity. We go and open our refrigerator and expect it to be cool. We turn on our light switch. We plug in our iPhone. However, electricity is essentially almost the second most important factor in our life, only after air. Because if we don't have electricity, we're not going to have water. We're not going to have our municipal water systems working. Our refrigerator won't work. And so there was a congressionally mandated commission that operated for 17 years that determined that as many as 90% of Americans would die if our power was out coast to coast for as long as 9 months. And we know that our adversaries have in their playbook, we've gotten that from talking to and seeing research and discussions from defectors taking out the power grid. We know that special forces do that when they go into a foreign country. They know that's the way to weaken a country. And so there's 4 major threats. Physical attack, like we've seen in North Carolina recently. 60 Minutes story talked about Metcalf, California, outside Silicon Valley back in 2013, could knock out substations. Second attack could be an EMP, electromagnetic pulse attack. A third attack could be a cyber attack. Jennifer Granholm, Secretary of Energy, said on a Sunday morning talk show that our adversaries were currently in the grid and could knock out the power. And then the fourth potential threat is a geomagnetic disturbance or the solar flare, knocking out our major transformers. So this film, 56 minutes, is narrated by Dennis Quaid. It's got big time music in it. As you said, it's won awards. It's highly watchable and entertaining. And we actually have a very patriotic ending to it, saying that there is hope, but we need to create TikTok soccer dads and mama bears and we have a facility by which you can add your home address, a few clicks of your mouse, and you can have letters sent to your regulators, your legislators, and your members of your board of directors of your public utilities. So we need your listeners to go to griddownpowerup.com, go this morning or this afternoon, and let people know that you care about this. This is a highly fixable problem.
Do you know how few people, including myself, ever thought about this, David? I know that when we had you on last time, this was last year, you already talked about, you were working on this movie, you were determined to get it out there, and you have. But I think such a tiny percentage of people that I've spoken to, they look at you with wide eyes. Well, really? You mean like my fridge would go out for days, weeks, months, a year? I mean, it's like you suddenly can't imagine. Once you start thinking about this, you need to go into action mode. You need to do something. You can't sit back and just put a warm and fuzzy feeling between your ears that it'll go away. It won't go away. And I think for this, when you look at that movie or that documentary, you get to realize we have the ability to take personal responsibility. Like anything else, we have the ability to take personal responsibility and do something. And you've created a facility and the knowledge and the information for people to act. This is about education, but could be life-saving, not just for yourself, for your family, for your neighbors, for the entire nation for that matter.
So you look at where we are today with this Ukrainian war, you look at the threat that China poses to Taiwan, you look at geopolitical strategists have said that we are potentially at greater risk for World War III than we've been since the Cuban Missile Crisis. And we've had the Vice Chairman of the Joint Chiefs of Staff, John Hyten, said in a speech that we've included in our film that this electromagnetic pulse attack is a real threat. It would knock out all the power, and that we have defended our command control centers for our military, but for our critical civilian infrastructure, not so much. We need to do something about that. And this movie is turning into a movement, and therefore we need to get your viewers, off their duff to go to the website. They can learn about this. They can watch the film for free. They can tell 20 of their friends about it, and we can make this happen.
And thank you for making it free, because this is all part of the process of information learning and putting things into play. And I think you've also stirred up some thoughts in my own mind, because the reality of what you just said. Yeah, it could be solar flares, it could be anything, it could be anything else. But let's face it. And I know you talked about this months ago, and also we reported on it a few weeks ago, that President Xi is preparing his people for war, and he is preparing his people for war. So, and he's and realizing, yes, he has to sanction-proof himself, but on the other hand, this is should anything happen. Should we make a wrong move, when I say we, this side of the NATO world make a wrong move, what's to stop? When you leave very few options, you don't need a nuclear weapon. This is so doable, so easy to do, it's scary.
It is so easy to do. And as you said, Xi from China, you listen to his speeches. He is at war with the United States. We are not in a kinetic war at this point, but we are just a couple small steps away. And I firmly believe that China will probably go after Taiwan before the Biden term ends, and therefore, we don't have that much time left. And then, how do we respond to that? And then if we do respond, is it possible that they turn off our lights? And maybe they turn off our lights in a few cities, but we are so close to a shooting war, a kinetic war. And if you read and listen to various global geopolitical experts, you'll find that is the case. And so I would urge your listeners, even though in the film we don't really talk about personal civil defense approaches you should take, but I think it makes sense to have a place that you can get away to, have some extra food and water, and prepare yourself. Don't just be a sitting duck.
Yeah, and it made me think about this country too, and I don't know quite. I'm sure the same vulnerability exists in every country around the world. We all depend on electricity to be on tap, so it is something that we not just people who are in America, and even if you're anywhere else in the world, should still write this letter. But I think you can also target it to your own country as well, and draw attention. I'm going to draw attention to GB News, for example, which is a great free speech channel in this country. I'm going to send them a copy of that today. Nigel Farage, I've interviewed with Nigel Farage, and he is a great supporter of free speech. And I think we should try and get you on his show to talk about this too, because it should be brought to the attention of everybody around the world. And I think, David, this has been, look, as you say, this can end well. So even though we're talking about something that is a problem, it can end well, much like we can take responsibility for every single action we take. Right now, we have the power to take your cash and convert it into physical gold, physical silver, and take that responsibility. At least you're taking a step in the right direction. With this film, you have the ability, now you know it, more fool us if we don't act. So then you take further responsibility. But I really thank you so much for coming and bringing this message to us, which is a positive message. And I don't want people to think that we're just talking about something here which is a problem. This is a solution. And thank you for creating this potential for a solution.
Well, thank you for that. And I feel like this will be my legacy as far as getting this out. And unfortunately, we don't have as many views of this film as we would have liked to have seen, but we're actually making progress inside the Texas legislature. It looks like Texas could very well pass, the first comprehensive, grid security legislation for any state. And we're working inside the Beltway in terms of DC to try to get committee chairmen and DOD and DOE, interested in this issue, specifically the Chinese transformer issue, and we're making headway. And so we're working behind the scenes, but we need fellow grid warriors, and so that's what I'd like to recruit.
Well, I think you've done that eminently well, and I think I say no excuse for not watching this. Number one, I've watched it. It is tremendously interesting. It's engaging, as you say, great music, great everything that goes with it. It's actually really entertaining, but it also providing that, and you have to make it entertaining, otherwise people wouldn't watch it. But you'll watch it right to the end, and then you'll get that positive response, that positive ending. Really, it's about being whatever country we're all patriots to what we believe in, and as a group, as a huge group, and this gold world really centers an awful lot of like-minded people, and I thank you so much for bringing this extra side to things that we don't normally talk about stuff like this. But thank you so much for joining us today, David. It's been such a blast to have you.
Always great fun. Look forward to sharing a pint, on one side of the pond or the other, Andrew. So let's get together.
We will do, and I'll see you again in Texas probably sooner than you come here.
All right. Sounds good. Thanks. Bye.
All right. Thank you, Andrew Maguire, and special guest David Tice of Grid Down Power Up for another fascinating discussion. And remember, buy physical, make sure it's 1-to-1 backed by physical, make sure it's insured also, and understand the difference between what Andy affectionately calls the casino paper gold and silver markets and the actual physical gold and silver markets. They're not the same. We talk about it every week on the show here. Don't be fooled. And there you have it. That's all we have for you today on another fascinating episode of Live from the Vault. Now, please help keep spreading the word about this channel by hitting that like button. Not now, but right now. Share this information and subscribe if you're not already subscribed. And if you want to be notified in real time as each episode goes live, just hit that bell right there and you'll be notified. And with that, we'll see you next time on Live from the Vault. See you then.